Assalamualaikum. Very good morning to everyone, and welcome all board members to the annual grand meeting. I am honored to welcome you here for our meeting on Google Meet as we had to work from home because of COVID-19. It is a great honor for me, Mr. Amir Irfan, at the same time, a great responsibility to lead Post Malaysia in the role me as CEO. Thank you for joining us today. Our finance manager, Mrs. Nur Inshira, our banker, Mrs. Khairunisa Nashita, and lastly, our shareholder, Mrs. Fadila Husna. The objective of our meeting is to receive and consider the financial report for Post Malaysia Berhad and to apply for a loan in Maybank to invest. Without wasting time, I handed over this meeting to Mrs. Inshira, our finance manager, to start our meeting.
Thank you very much, Mr. Irfan. Hi and Assalamualaikum everyone. My name is Nur Inshira and I am the finance manager for this company. Now, I will continue the meeting by presenting our company income statement for years 2019 and 2020. As we can see, the revenue and gross profit in 2020 appears to be larger at 1,747,849 ringgit, and the gross profit is 138,923 ringgit. However, the other element in this income statement appear to be lower in 2020 than 2019. As been shown, we have lost 368,835 ringgit in operating income during 2020 compared to previous year where we only lost 187,895 ringgit. The earnings before tax and after tax in 2020 have also decreased to negative 377,938 ringgit. Next is the balance sheet for year 2019 and 2020. As has been shown, the total asset for year 2020 appear to be lower with 2,342,496 ringgit compared to 2019 with 2,632,389 ringgit. The total equity and liabilities also had the same value as total asset. Now, I will talk about the comparison ratio analysis for year 2019 and 2020. So first of all, for the liquidity ratio, the current ratio in 2020 appeared to be lower with 0.89 times compared to previous year, which shows that the company current assets are not enough to pay the debt. Next, liquid ratio in 2020 also appeared to be a bit lower with 0.74 times compared to 2019. This indicates that the company may have a hard time to pay off its short-term obligation as the due comes. The second ratio is the efficiency ratio. The company states that inventory turnover during 2020 is 460.88 times, which is higher than 2019. This shows that the firm effectiveness is relatively good as with one ringgit investment, the firm is able to produce 460 ringgit of cost of goods sold. Then, the average collection period in 2020 is only 134 days compared to the previous year, which means that the company managed to collect the receivable more quickly than before. Next is the fixed asset turnover during 2020 is 1.30 times, and the total asset turnover for 2020 is 0.75 times. Both of these assets showed an increase in 2020, which also means that the company has used the asset efficiently in generating revenues. All of these details conclude that the company operation has become more efficient. The third ratio is the leverage ratio. So first, the debt ratio in 2020 has increased to 59.07% from 49.22% during 2019. Second, the time interest earned during 2020 has also increased to 67.52 times compared to 2019 with 31.49 times. Third, the debt to equity ratio in 2020 has decreased to 1.76% from 1.78% in 2019. And last but not least is the profitability ratio. The company states that the gross profit margin during 2020 has increased to 7.95% compared to 2019 with 4.05%. Second, the operating profit margin in 2020 has decreased to negative 21.10% compared to 2019 with negative 60.04%. Net profit margin in 2020 has also decreased to negative 21.62% compared to 2019 with negative 40.55%. Then the return on total asset in 2020 has also decreased to negative 60.30% compared to 2019 with negative 6.48%. And lastly is return on common equity has also decreased to negative 39.42% during 2020 compared to 2019 with negative 12.75%. So that's all from me. Thank you.
Okay, thanks to Mrs. Inshira for explaining to us the solid content. Next, let's move to our banker, Mrs. Karunisa.
Hi and Assalamualaikum to all of you. Thank you to Mr. Amr Irfan for inviting me to this annual grant meeting. First of all, I am very sorry as I cannot open my camera due to my health problems. So today, I will tell you my opinion about your company's financial status as a banker. There are a few things that I can conclude when I see your statement of financial position and also the leverage ratio. Now, starting with the debt ratio, the graph shows that the debt ratio for the company has increased from 49.22% in 2019, to 59.07% in 2020. In my opinion, this is not a good thing and it's such a speed increase as the company will face financial risk if you are not able to pay back the debt. I advise you to not take any loan from any bank for next year as it will make your company have higher financial risk. Next, the time interest earn ratio. The graph shows that the time interest earned has increased from the year 2019 with a value of 31.49 times to 67.52 times in 2020. It is a good thing as time interest earned is calculated to know whether your company is able to make interest payments and the extent to which earnings can decline without resulting in financial embarrassment due to inability to meet annual interest costs. Lastly, the debt to equity ratio, which measures the relative funds provided by creditors as compared to owners or net worth in the firm's capital structure. A ratio more than 1 indicates that creditors provided more funds compared to owners. So, based on the graph, the value for the year 2019 is 1.78 times and 1.76 for 6 times for 2020, which means it is a great thing, although it means the creditors provided more funds than the owners. And as a result, the creditors' position is less risky and vice versa to the owners. So based on the leverage ratios, I can conclude a few things that you should do for the next year's operation so that your company will not face bankruptcy or vice versa. So first, you should not make a loan from any bank as it can lead to financial problem. Second, try to vary your marketing so it can increase your sales. And lastly, provide more funds than the creditors. That's all from me. Thank you.
Thank you, Mrs. Karunisa. Next, I will leave it to Mrs. Husna as shareholder to comment on the fluctuating profit.
Okay, thank you, Mr. Ifran, for giving me the opportunity to join this annual grant meeting. Okay, hello everyone. My name is Nurfadila Husna. I'm is one of the shareholders for this company. Based on the financial ratio presented previously, I'm satisfied with the performance of the company for both years. Despite the current pandemic that occurs in the worldwide world, the company is able to gain a numerous amount for the profit. This is an excellent accomplishment. As a shareholder, the profitability of this company is my main concern. I'm confident that I can receive a decent amount of dividend from Pus Malaysia. From the explanation Ms. Inshira about the profitability ratio, the company state that the gross profit margin in 2020 is 7.95%, which is higher than 2019. This shows that the company has more cash to pay for indirect and other costs such as interest and one-time expenses. However, The other element in this ratio appears to be lower for the year 2020. Furthermore, I noticed that the return on equity is very low for both years. This is a bit worrying, and to be honest, I'm quite disappointed with the percentage. This implies that the company is less capable of generating cash internally. All of this detail can be interpreted that post-Malaysia operation during 2020 produced low profitability and have not been really efficient. Therefore, I would like to know that the company's strategy to increase the return on equity.
As CEO, in my opinion, the strategy of raising profits for the coming year is to review the postage rates, which was the last time the postage price was reviewed in 2020. The postage price review was clearly having a positive impact. Also, the strategy to increase profits for the coming year is for business to shift to e-commerce. This is because as more and more consumers and businesses switch to e-commerce, the success of this transformation plan is crucial for Post-Malaysia to take advantage of the opportunities in the new norm. To meet the growing demand for e-commerce, Post-Malaysia is now focusing on digitalization, cost optimization, and customer experience as part of the transformation journey. This is because e-commerce provides a hug opportunity for Post-Malaysia and continues to invest to enhance the value chains of the current business in line with the boom of e-commerce. Post-Malaysia's revenue thus supports the cost of serving more than 9 million addresses nationwide. Okay, this is just from me on strategies to increase next annual profit.
Okay, thank you, Mr. Ifran, for your explanation. I hope that the strategy will archive to improve company profit soon. Nevertheless, I'm certain that the company will perform better in the future, which concurrently make me think of increasing my equity for this company. As for now, I would like to increase my equity from 20% to 25%. Meanwhile, with reference to the liquidity ratio, I suppose that our financial status is strong, enough to pay for its short-term obligation and is capable of performing in the long run period. That's all from me. Thank you.
Okay, thank you, Mrs. Inshira, Mrs. Usna, and Mrs. Karunisa for the information given just now. Before we end our meeting this time, are there any question or suggestion to us?
No.
No?
No.
Okay. If there are no question or suggestion, we are here to end the meeting. Thank you for the cooperation given by all of you. Until we meet again. Bye.